Hello, everybody. Hello, and welcome to the first episode of STR Rev Talk podcast, where we dive deep into the world of revenue management strategies for short term rental hosts. Today, we have a special guest who's going to share her insight and question with us. Welcome, and thank you for being here. The podcast today will be hosted by Dries, our head of revenue management, with a background in business engineer and a specialization in finance. Welcome to you, Dries. And so, Dries, the floor is yours. Let's get started.
Okay, thank you, Veronica, for a great introduction. Hi, everybody. How is everybody doing?
Good. What about you?
I'm great. I'm great. I'm looking forward to have the podcast. It's the first time for me as well. It's the first episode of the series. I believe you had some questions for us about your revenue management strategy, and we will go deeper into that in this podcast. But maybe before we start, could you maybe tell us a bit more about like who you are as a property manager, where do you manage your properties, where is your company located, etc.
Yes, of course. Most of my properties are in Indianapolis, and one property is in California. In total, I'm managing five properties right now.
Okay, and you're managing them all with the PriceLabs and RMS?
Yes, all of them are in PriceLabs.
Okay, great, great. Till now, how good have is your experience with PriceLabs?
Since I'm using PriceLabs, I feel like pretty much everyone is using their RMS as well. So I was wondering, how can I stand out from the competition? Is it not everyone following the same waves?
Indeed, yeah, that's actually a really great question because the more and more people use similar tools, you would think that eventually we will have kind of similar pricing. But of course, there's also a lot of parameters and factors and variables that you have to install into PriceLabs that kind of make the use of it and then the outcome of it a bit different. Maybe could you like before we kind of delve deep into like how everybody can have the same strategy. Maybe let's look first into your pricing setup and your strategy. Like, what are you currently doing? And then we can see like, does the market do the same, etc.
Yeah, so I open the calendar 6 months in advance, and most of my properties, for some reason, always gets booked within a month. I go with the default base rate that whatever price lab suggests and default minimum price. So as the days get closer, I keep reducing the prices. And I kind of automate it by saying, okay, within 5 days, the promotion can go up to 10%, 20%, depending on the property. I manage groups in PriceLab where I apply all group level settings. For example, where there is a major event, something I spot through Finder data, which highlights popular dates wherein nightly rates are spiked by like 1,000 or even 2,000 USD. I usually identify those in advance and increase the price by 50% for specifically those dates.
Yes. Okay, so you look for high demand dates via certain tools, and then you increase those prices and price that. Can I ask you like how are you doing it? Do you use the group calendar function?
Yes, I do. So also recently I noticed a pattern. Most of the properties either get a high volume bookings 30 to 60 days in advance or within the last week to 10 days before the check-in. So now I started lowering pricing during these two windows between 30 and 60 days out, and again between 7 and 14 days before the booking date. This approach seems to perform better than leaving prices unchanged.
Okay, very interesting. And doing these kind of changes, do you use the Faro pricing feature in Price Labs, or how do you do it?
I haven't heard of this feature yet. Can you tell me what it is?
Yes, so the Faro pricing feature in Price Labs kind of lets you price, in the future. So like it kind of says, what it is. So the Faro pricing feature lets you ensure that prices for future dates are slightly higher. So one example is, you want after 20 days, you want premium on your price, on your base price, for example, of 10%. There's possibilities, you can apply it after only a certain amount of days. You can define it aggressive, conservative. You can define it fully yourself. So there's a lot of, optional options with it. But it's always important to keep in mind, that Faro pricing always will last indefinitely. So if you define it after 20 days, a premium of 10%, it will do so into the full future up until also your next low season or high season. So it's important that you keep track of it on how it affects your pricing into the future.
Okay. How do I access that feature in PriceLabs?
So the easiest way to access it, I would say, is you go to either account level or group level customizations and PriceLabs, and there you find the option to define your Faro pricing. So you can have a Faro premium or a Faro or a discount. It kind of works the same way, and then you just select your group. So usually you have your groups defined, and from there you can configure the pricing behavior. As I said before, you can handle it automatically as well, or do it fully your preference, like fully how you want it. So there's a few options, as I said, there's a flat option or a gradual option, but there's also, price levels that let you say, like, I want it balanced, conservative, or, aggressive, kind of depending on your assertiveness and on how you want to your pricing to be far out in the future.
Okay, that's clear. Thank you.
Yes, and then on the other side, kind of the reverse, you also have the last minute discount, which kind of is the opposite of it. So this is the same similar tool, where you can automate, your price a bit more. Like for example, if your lead time is in a certain way, you can say like after my average lead time has ended, I implement the last minute discount.
Yes, I do that in group level in PriceLabs. For example, I set last minute discounts to gradually drop by 10% or within 3 days across the group.
Yes, indeed. Yeah. And like you're doing it, is that because you found it harder to get bookings at the higher ADR, the closer you are to the check-in date?
Yes, exactly. I was concerned about missing out potential bookings. Around 30 to 40% of my reservations comes between 30 and 60 days in advance. But another 20 to 30% happen within just 3 or 2 days of check-in. I didn't want to lose those last minute guests by keeping prices too high. So I kept the window short, just 2 or 3 days. That said, I've been wondering if that's the right approach. Maybe I should test a longer window, like a 5 or even 10 days. If that helps boost the last minute share for like 30 to 40%, it might be worth the trade off, even if I'm discounting more.
Yes, I actually agree on that point. It actually could be a better approach because considering your lead time, which is an average between 30 and 60 days, a slightly earlier, price drop might capture more bookings without sacrificing your ADR too heavily. And have you looked into, like, for example, market data on concerning like what is the listed price and also like the average lead time, etc.? Do you sometimes use the market dashboards and price labs?
Yes, I actually started using Market Dashboard. It shows the market's typical booking window falls between 21 and 40 days. In my case, most of my listings are larger homes. Three of them have more five bedrooms, all located in Indianapolis. I also have one duplex that we list as two separate three-bedroom units, creating a parent-child listing setup. These properties mostly attract big groups or multiple families, and those types of guests usually book further in advance, typically 30 to 60 days out. On the other hand, smaller individual families tend to book closer to their stay, usually around 3 or 4 weeks ahead.
Okay, yes, so that explains the difference. So here, a potential option would be to kind of make two groups based on either, if it's a larger or a smaller property, to have a different last minute discount based on like individual listing average lead time. Maybe if we couple back a bit, you mentioned that you also price, for events. I think you said you use the group calendar function, but what do you do? Do you set a fixed price? Do you increase your minimum price? What's your approach? How do you do it?
Yeah, in PriceLab, I use the multi-calendar view. Those high demand dates show up in green, which is really very helpful. For those, I usually use the group calendar to set prices about 30, about 50% above the market rate. Sometimes I even set the price 100% higher than usual. Not necessarily to get the bookings, but to avoid getting booked too far in advance, like 5 months out. Then, when the event is about 30 to 60 days away, I adjust the pricing to maximize revenue and capture the top price.
I see. Yeah, no, I actually agree that group calendar is a great tool for adjusting your prices. For like these event dates, because you can do it on the full group that you want. But I have to say, it's always important that you have to be cautious with the group calendar, because it works together with, if you also have your demand and seasonality factors on. It could be that eventually, because you have demand factor increase because of the high event date, and if it's in high season, also your seasonality factor active. What could happen is that, because you also then add your own input on the group calendar, that your prices will be actually too high, uh, without actually you realizing it. So, well, actually, we also, like, I also have encountered this, and my colleagues at Optimize and AutoRank as well. We always kind of look at like the average ADR that we see of last year. So we find either a similar event, or if it's the same event, we look at the ADR per listing. How did this listing perform last year? What was the ADR we were getting at? Of course, taking into account the lead time. And what we then do is we just install like a safety minimum price. We kind of call it. It's not safety minimum price from PriceLabs, but it's kind of our own safety minimum price. So we install the minimum price for these event dates, and we just add a premium of 10%. So then we know if there comes in a reservation for this event, it will be at a 10%, at least a 10% higher ADR than what it was last year. And because you do a minimum price, you still have that PriceLabs have the option to have your demand factor and seasonality to play along, and also your other customizations will still work. Because with group calendar, you just add, for example, 50%, which can lead to like a very, very high price. While if you use a safety, like a minimum price increase on it, you don't really have that issue, in my experience.
That's a great tip. Thanks, Dries.
Yeah, no problem. I think you also mentioned that you keep your calendar open 6 months in advance, and that's correct. But I believe Price has let you open the calendar up to 1 year. Is there a specific reason that only 6 months ahead?
Honestly, no particular reason. Most of my bookings happen between 30 and 60 days out, and I rarely see reservations more than 6 months ahead.
Yeah, okay, it makes sense then that you open your calendar only 6 months ahead. But I would recommend that for OTAs, Airbnb, Booking.com, VRBO, it actually helps a lot with ranking and visibility that you open your calendar like at least 1 year in advance. We always recommend it to open your calendar a bit further ahead, because also PriceUp gives you the option. So I would always recommend to do it, because there's also the possibility to get booked, and then your ranking, etc., etc., it improves.
Good point. If it helps with ranking, I'm definitely willing to do it. Rankings make huge difference, so I'll open the calendar for the full year.
Okay, perfect, great to hear. And then, do you have any other specific questions about PriceLabs use or a feature in PriceLab that you want some info about?
Yes, about the last minute pricing, you mentioned automatic it. Based on my lead time, how many days in advance would you recommend applying last minute discounts? 2 or 3 days?
Okay. Yes. So I actually would always base that decision on your average lead time. You can either do this on an look at the group level average lead time, or at the portfolio level, or at your listing level. Depends how deep you want to go. Uh, for example, if your average lead time, as you said, is between 30 and 60 days out, what I would do is I would start adjusting gradually, before, the closer you move to check-in time. So, for example, let's say today is June 4th and you're targeting bookings to July 4th. That's a 30-day window. I would suggest to start applying small incremental last-minute discounts now, and we continue lowering the prices gradually as the check-in date approaches. So this gives PriceLabs flexibility enough to optimize pricing still, without dropping too sharply all at once.
Hmm, great. So, how much of a discount would you really recommend? Like, I know ultimately it depends on my own pricing strategy, but do you ever go below the minimum price?
Yes. So on the specific discounts, that's difficult to say, because your other parameters and other factors influence your prices as well. So what's, for example, the difference between your base price and your minimum price, that impacts the decision on how high your last minute discount should be, etc. But with regards to the minimum price, it always depends on how you look at the minimum price. So, for example, is your minimum price very conservative in the sense that it's a bit higher to design that every booking is a good booking, or is your minimum price really like aggressive to let PriceLabs have the full flexibility? But in general, I would always recommend giving PriceLabs the most flexibility, because what I see a lot is that people have kind of a conservative min price, and that way PriceLabs just constantly is at the min price. Like especially in low season, I see this a lot, that the min price is actually way too high because they are afraid of far out lower booking. But yeah, in these cases, I always would say or recommend to make sure your min price and your base price do have a big difference, because you need PriceLabs to do the work for you. That's kind of the main goal, of using PriceLabs. It's a very good system, but you have to use it well. So the main thing is to always let PriceLabs have this flexibility. So I would always recommend your minimum price to be quite aggressively downwards. So in that way, you create space for dynamic pricing to work, and you let PriceLabs do all the heavy lifting wherever possible.
Okay.
Yes. Okay. Maybe let's return to your original question, or the first question you asked. Before I asked you all the strategy questions. What you pointed out is that you wanted to differ from the competition, but you feel that
Hmm.
everybody's using an RMS or PriceLabs, and how can I differ from my competitors? As I said already, many people use PriceLabs, but everyone uses differently. So your strategy, like how far you go below market pricing, depends heavily always on first your minimum price settings, your customizations, how you interpret data from the market dashboard, etc. I think the main thing to do if you want to stand out is to always use portfolio analytics and baseline report apps. These tools let you compare your listing prices directly against the market averages. And also then you can make more informed adjustments based on the real data, because PriceLabs really provides very good data. It's great from Airbnb or VRBO, you can choose. And that way you can really make sure that your pricing is more in line with what you want, and also base yourself in the competition. Maybe in this sense, because you also want to know, like in low season, for example, how do I underprice the market, whether it's far in advance or at the last minute. It doesn't usually trigger a pricing drop across the board, but most hosts, in my experience, are very hesitant to follow extreme pricing changes because of fear of uncertainty. Uncertainty is probably the main driver, for revenue managers, in order to not, proactively make sure your low season is very low, or like you go low in low season with your prices. So if you want to underprice the market, my main recommendation was to do it always far in advance, because most people, for example, they usually have faro pricing on with the premium. And as I said before, this premium lasts indefinitely. So what happens is, so if you, for example, would install it right now, it would also make sure that next year your low season will also be impacted. So that way, because of the faro premium, you have a higher price in your low season. And if you don't have that, if you don't have that faro pricing rule, then that way it will be much easier to secure early occupancy for your lower seasons. Because once you capture those early bookings, for your low season, you're much better positioned. Because the others have not dropped their prices yet, or they don't even know their prices are a bit high. So I would say overall, in general, I would always recommend to early underprice strategically for low season, so it can work in your advantage, and then you don't actually have to pull the entire market down. Because in my experience, people always have a faro premium, or at least the prices in the future, because of uncertainty, they price it higher. So if you just go a bit below early on, that way you can secure early occupancy, and you're in a much better position to enter your low season.
Understood. So, is there something in PriceLab that prevents prices from dropping like too low? Like if there is some kind of a safeguard that keeps you going more than like 10%. So, is there like a base or a minimum rate?
Yes, well, I mean, you have other listings in Indianapolis, right? So let's say you want to prevent prices from bottoming out. What typically do is disable the faro pricing feature and set a very low minimum price specifically for your low season. And that way you can, ensure, it doesn't bottom out completely. But for example, what would you consider your lowest demand period?
In Indianapolis, that's usually September through December.
Okay, so perfect. So let's use, for example, December. So if you're currently open for December and you don't have a custom seasonal profile active, but your listed price is still high due to faro pricing, then your prices for the periods will likely be above market average by default. So in my experience, many revenue managers leave out faro pricing active, or they still use it in some form. So what I would recommend for your low season is you disable faro pricing and you combine it with a seasonal profile or smart demand factors. That way you can position your rate to drop below the market much earlier, which will give you a big edge, to secure that early occupancy, and you will enter low season, in a much better position. So it's always important to underprice the market early in the low season rather than waiting until the last minute, because last minute everybody will be dropping rates and then you just go into a waterfall of dropping, dropping, dropping. Also, what I noticed, many hosts or many revenue managers, they always want to beat their last year ADR, so they will hold out a bit longer. So I wouldn't be scared to drop early on, because many people will keep rates high because last year's ADR was like this. But last year's ADR is not an indication, for this year's ADR, in my opinion. So I will always suggest to secure early occupancy for the low season, and I think that will always result in a stronger overall revenue.
Got it. When should I actually start discounting, considering my lead time is typically between 30 to 60 days?
Yes, I would always recommend to do this on a listing basis, because then you will have better and more specific pricing. So if most of your bookings happen between 30 and 60 days before check-in, I would say start adjusting your prices earlier, maybe around 75 days, and continue adjusting as you move close to the 30-day mark. For example, you can start around 70 to 75 days out, and then gradually change prices to the 20 to 50-day range, if that makes sense.
That's actually making sense. So, and in general, during low season, should I use discount or a premium where setting far out pricing? Like, what about US market? Should I raise prices and or lower them?
Yes. So as I said, in low season, it's important to not have, these faro premiums active, but we can use the faro discounts as well. So that's also a possibility. But again, also with those faro discounts, they will remain indefinitely. So they keep on going into the future. So that's always something you should be aware of. Usually also PriceLabs already increases prices in high demand periods, but as revenue manager, we often try to push them also still a bit higher. So you kind of have double work, you have it. And then in the low season, typically want lower prices to stay more competitive and also attract more bookings.
Should I apply the discount or premium only outside of my lead time? Since my lead time is between 30 to 60 days, should I apply these changes days further out than that or also within the range?
I would say that it depends, because is your lead time the same during high season and low season?
Yes, it's pretty much the same, still 30 to 60 days.
Okay, yeah. So in that case, for low season, I would say you should apply discounts both within that 30 to 60-day window and even 4 days further out. And for the high season, I suggest you start your price increases a bit earlier than your usual lead time. That way, prices rise gradually as you get closer to your busy season.
Okay, thank you. So how do you far out pricing like and seasonal profiles compare? What happens if I using both actually?
Very good question. So essentially, they can overlap, but they do work differently. So faro pricing, how it works is that it will apply the premium after your uncustomized price. Well, for example, your custom seasonal profile, what will happen is they will work before the market factor and seasonality factor works in. So for example, your base price, if you have a custom seasonal profile, you say adjustments on your base price of 20% premium for high season, then if your base price is 100, then first your base price will be 120, and then your market factor and seasonality factor will be impacted. And then afterwards, then you have your uncustomized price. Afterwards, you'll have your faro pricing, last minute discounts, occupancy-based adjustments, etc. So in a sense, seasonal profiles give you a bit more control. It's much more specific, but you have to be aware on the sequence, the way it works. So for example, the seasonal profile will work earlier on your base price than the far-out pricing. So that's something that you always have to keep in mind, and the difference between seasonal profile or the far-out pricing. Also, with seasonal profile, you can have more specific dates. So as I said a few times already, far-out pricing always will remain indefinitely into the future. So 20% premium after 20 days will always be 20%. And your high season, low season next year, 2026, 2027, it will always be 20% premium. A seasonal profile, on the other hand, is much more specific because you can have an exact date range. For example, if you want for your low season December 1st to December 23rd, a specific base rate or specific minimum price for that period, you can do it very easily with a custom seasonal profile. However, be aware that when you use this, you have to make sure that your other variables and parameters are still in place and are still working as you want them to be.
Thank you, Dries. It was very interesting and it actually helped me a lot.
No problem. Thank you.
Okay, so I think this is the end of the first episode of STR Rev Talk. So a quick sum up. In today's episode, we explored how even in a market where most hosts are using similar tools like PriceLabs, it's still possible to stand out, not by following the same partners, but going deeper into customization. Like, for example, we discussed about the importance of aligning prices with your lead time, using tools like for up pricing and seasonal profile effectively, and setting realistic minimum prices to maintain flexibility. We also covered how to handle high demand events, use group setting for easier portfolio management, and why opening your calendar further in advance can boost platform visibility. Finally, leveraging data from portfolio analytics and market dashboard can help fine-tune your strategy and stay competitive. So a huge thanks to you, our guest, for sharing your experience. And thanks to Dries for breaking down so many practical revenue management tips. I hope you enjoyed the episode. Thanks for listening. And we'll see you next time on STR Rev Talk. Bye. Thank you.